IARM Ltd. is currently trading at $52.79, up an incredible 15.19% on the day. If you are looking at your screen right now, you are seeing a green candle that is virtually ignoring the broader hesitation in the macro markets. The volume is surging, the order flow is aggressive, and the tape is telling us a story that goes far beyond simple Bitcoin correlation. We are seeing the stock open near $48.97 and immediately rip higher, testing $53 intraday, creating a massive liquidity vacuum that short sellers are scrambling to cover. This is not just a good day at the office for Iris Energy. This is a fundamental repricing event happening in real time. Most investors look at IREN and the expectation is standard. They see a Bitcoin miner, they check the price of BTC, and they assume the stock will move in a one-to-one correlation with the crypto markets. That is the expectation. The reality, however, is completely different and frankly much more lucrative for those paying attention. The reality is that the market is no longer pricing IREN solely as a miner. It is beginning to price it as a high-performance computing infrastructure powerhouse. We are seeing a decoupling event where the stock is catching a bid not just because Bitcoin is holding up, but because the AI and cloud computing narrative is finally converting into tangible earnings multiples. You are not just buying a hash rate operator here. You are buying into one of the most energy-efficient, renewably powered data center plays in North America, during a time when power scarcity is the #1 bottleneck for artificial intelligence. When you look at the intraday action, notice the volume spikes happening at the $50 psychological level. Institutional capital is stepping in. We are seeing block trades that suggest the smart money is positioning for a run to the analyst price targets, which are now stretching toward $80. This 15% move today isn't retail traders on a Robinhood app frenzy. This is systematic accumulation. The stock has broken through key resistance levels that have held it back for months, and now that we are in the 50s, the air above is thin. The selling pressure is evaporating because no one wants to sell a breakout of this magnitude when the fundamental thesis is shifting from crypto cyclical to AI secular growth. Let's pause on the immediate price action and look at the broader context. If you track Tesla stock or Nvidia stock, you understand that the market pays a premium for future growth, not just current earnings. IRENs is receiving that tech premium right now. The narrative has shifted. While companies like Apple stock focus on consumer devices, the back-end infrastructure required to power the intelligence on those devices is where IREN sits. They are effectively selling the picks and shovels for the digital age, but instead of just mining digital gold, they are powering the neural networks of the future. This dual-engine business model, Bitcoin mining providing immediate cash flow and AI cloud services providing exponential growth, is what is driving this 15% surge today. We need to discuss the specific mechanics of this move. The stock opened strong, dipped slightly to $48.83, and then found a massive wall of buyers. This type of price action, where the low of the day is set in the first 30 minutes and then the stock trends higher for the rest of the session, is a classic trend day profile. It indicates that fund managers who missed the initial entry are forced to chase the price higher throughout the day to get their allocation. If you're using Schwab Intelligent Portfolios or managing your own capital through an individual brokerage, you might be seeing this ticker flash across your top gainers list. The question you have to ask is whether this is a squeeze or a sustainable move. The data suggests the latter. With a market cap now firmly over $14 billion, IREN has graduated from the small-cap volatility sandbox into a serious mid-cap contender that demands attention from larger asset managers. The expectation from the bears was that the halving dynamics would crush margins and that the AI pivot was just a story. The reality is that IREN's renewable energy strategy in Childers, Texas and British Columbia has insulated them from the worst of the energy inflation that is hurting their peers. While other miners are struggling with grid curtailment and carbon credits, Iris Energy is monetizing its power capacity at premium rates. They are not just plugging in ASIs. They are deploying NVIDIA H100 and H200 GPUs. This hardware is the scarcest commodity on the planet right now. By securing these chips and the power to run them, IREN has built a moat that is incredibly difficult to cross. Let's talk about how you might be engaging in this market. Whether you are using Fidelity Investments to manage your retirement or trading actively on Interactive Brokers, the liquidity in IREN today is exceptional. We are seeing millions of shares change hands, which allows for easy entry and exit. For those of you engaging in online investing, it is crucial to understand the difference between buying a stock like this via Fidelity ETFs that might have a small allocation versus owning the direct equity. The direct equity exposure gives you the full beta of this move. If you're using the Fidelity mobile app or the Robinhood app, you might notice the options premiums are also spiking. This implies that the market makers are expecting continued volatility. They are pricing in big moves, not stagnation. There is a specific angle here regarding the AI cloud revenue. Most people think of Amazon or Microsoft when they think of cloud, but the hyperscalers are running out of power capacity. They need overflow capacity. They need immediate plug-and-play data centers that can handle the heat density of modern AI clusters. Iron built their facilities for high-density Bitcoin mining, which, as it turns out, is the perfect architectural precursor for high-density AI computing. This serendipity, or perhaps foresight, is why the stock is trading at $52 and not $20. They didn't have to retrofit an old office building. They built industrial-scale power centers from day one. This is why we are seeing comparisons to pure-play data center REITs, but with the added torque of the crypto cycle. I want you to take a second and comment below how many shares of Iron you currently hold, or if you're watching from the sidelines waiting for a pullback. Are you in this for the Bitcoin exposure or the AI pivot? The community insight on this is often faster than the analyst upgrades, so let us know your position. Continuing with the analysis, we have to look at the comparative strength. Look at the other miners today. Some are green, sure, but are they up 15%? Are they breaking multi-year highs with this level of conviction? Generally, no. Iron is demonstrating relative strength, which is one of the most powerful indicators in technical analysis. When a stock outperforms its sector peers, like Mara or Riot, it acts as a magnet for capital rotation. Portfolio managers will sell the laggards and buy the leader. Right now, Iron is the leader. This rotation fuels the move further, creating a self-fulfilling prophecy of higher prices. If you're using SoFi Investing or SoFi Active Investing, you might see these sector comparisons in your dashboard. Pay attention to them. The divergence is where the alpha is. Let's discuss the institutional footprint. We know that firms like Susquehanna and Jane Street have been active in this name. When you see a stock move like this, it is often because these large players are adjusting their delta, or their exposure to the underlying price moves. They are not day trading. They are positioning for quarters and years. They see the roadmap to 2026 and 2027, where Iron's power capacity scales up massively. The timeline for energizing new substations and bringing new exahashes online is being accelerated. The market loves certainty, and Iron has been executing on its timeline with a precision that is rare in the crypto mining space. Furthermore, we have to address the macro environment. We're in a period where the government and private sector are both realizing that energy independence and compute sovereignty are national security issues. Investing sites and financial blogs are starting to pick up on this energy is the new AI thesis. You cannot have AI without electricity. Iron controls the electricity. Therefore, Iron controls the AI bottleneck. It's a transitive property of value that is finally being priced in. If you're engaging in self-investing or looking for investment help, this is the kind of macro connection you need to make. It's not just about the chart patterns, it's about the plumbing of the digital economy. On the technical front, the $50 level was a massive psychological barrier. Now that it has turned into support, we could see a blue sky breakout. This happens when there is no historical resistance overhead, no bag holders from 5 years ago looking to sell at break even. Everyone who holds the stock is in profit. This creates a lack of selling pressure known as supply shock. When you combine supply shock with high demand, you get aggressive vertical moves like we are seeing today. Traders on Fidelity trading platform or Interactive Brokers trading setups will be looking for flags and consolidations to add to their positions, but in a strong trend, those dips might be shallow and fast. Now, what are the risks? We must be balanced. The expectation is that this growth continues indefinitely. The reality is that execution risk is real. Expanding data centers is hard. Supply chain delays for GPUs are common. Regulatory changes regarding Bitcoin mining energy usage are always a threat, although Iron's 100% renewable status mitigates this significantly compared to coal-based miners. Also, if Bitcoin were to crash 50% tomorrow, IREN would take a hit, regardless of its AI business. The correlation is decoupling, but it is not zero. Investors using Schwab Intelligent Portfolios or Fidelity Wealth Management Services would likely be advised to keep position sizing in mind. This is a high beta name. It moves fast in both directions. However, the reality today is that the upside potential is currently outweighing these risks in the eyes of the market. The sheer volume of capital entering the stock suggests that the risk on trade is fully active. We are also seeing a potential short squeeze dynamic. IREN has had a decent amount of short interest from skeptics who didn't believe the AI story. As the price climbs past 52, 53, 54, these shorts are forced to buy back shares to close their losing positions. This buy-to-cover volume adds fuel to the fire, accelerating the rise and punishing those who bet against the company. If you are managing an